One of the cautionary points that you make is to try to avoid corporate owned farmland. Why?
It's real quick and easy to get farmland into a corporation. It's very hard and long to try to get it out. And there might be some short-term benefits to putting it in right now, but you need to understand what the long-term costs and what the long-term
Realities?
way it's going to affect when you decide to rent it out or you decide to sell it. There's all kinds of things that you need to look at or consider at the far end or looking into the future as to how that's going to impact the decision I'm making today. Don't just look at, this maybe makes some sense right now, and maybe it has to happen, but how is that going to impact all of my future decisions going forward?
So I don't know if you can do this, but can you give me some examples of what kind of pain and suffering is at the other end?
For sure. Things to be cautious of with corporately owned farmland would be the fact that corporations don't have a capital gains exemption. So if you own that land personally and the value goes up, as long as the capital gains exemption is available to taxpayers, you potentially won't pay any tax or very little tax on your sale of your farmland. If that land is in the corporation and it appreciates in value, the corporation is going to pay a tax on every dollar that it is appreciated, which could have been offset had you owned it personally. Renting it out, if you're going to simply rent it out on a cash basis in the future, you're looking at inactive income in a corporation, which is taxed at approximately 50%. Versus, personally, you'd be in the 40% tax bracket and likely much lower than that. So understanding the tax implications later on, it doesn't matter if you want to rent it out or sell it, they're both going to have some negative impacts later on.
If I'm thinking of transferring my farmland to the next generation, any tips, any things that I should be aware of doing that?
Well, definitely corporately owned farmland is going to complicate that process as well. Owning it personally is going to allow you to transfer certain pieces to certain individuals, whereas if it's owned in a corporation, the whole corporation has to go to those individuals. Farmers have a lot of special rules, and this is one of the special rules that that's available to them and not to other industries, is that they can transfer that land without any tax implications to the next generation. And but they can do it at the adjusted cost base, but that information needs to be passed on as well to the next generation, so to make sure that because that now becomes their adjusted cost base for that generation when they ultimately want to sell it. Make sure that mineral right titles are getting transferred as well. Quite often we look at just the surface rights, but if there are mineral rights attached to that we are transferring that as well, and that they don't get left behind and end up going back to the Crown. Might be some value. You never know when that could be valuable to you in the future.
Are there any implications in terms of whose name's on the title or that kind of stuff?
Yeah, you want to look at who's, if you truly want that land to go to specific individual, by all means, their name should be on the title. But don't simply, put maybe all of your children's names on titles just for instance, probably probate planning or estate type planning. Realize what some of the future costs might be to doing that, and what some of the implications might be, like divorces or bankruptcies, or even borrowing money. If their name's on a title and you want to borrow money against that land, then it means you have to get everybody to sign off on that in order to borrow any money against that land. So it can complicate the future more than it can simplify it.
All right, always great. Appreciate the insight.
No problem.
Lance.
Thanks, Kevin.
Okay.
Take care.